Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 followed by the Nasdaq100 and the Dow Jones30 future charts. Just before I start today's video, as usual, anyone who's looking to join my Signal team, then make sure you visit my website dailymarketmovements.com. The website link is in the description of today's video. And once on my website, all you have to do is scroll down and click subscribe under the monthly subscription section. But let's get started with today's video. S&P currently trading down 0.2 of a percentage point. Rather muted volatility. We were down 0.6%. I think it was around about the US market open. But since then, we have managed to pare some of those losses. We currently find ourselves trading just shy of 5,120. Nothing too serious has happened during today's decline. Either that included last Friday's decline as well, where we fell a little bit more heavy, down around 0.5%. But in terms of this uptrend that we've been trading in since the beginning of October, no deterioration or no technical damage has occurred as of yet, and we are still trading very nicely within this uptrend. And I still believe that 5,200 is easily achievable by the end of this month. One thing that I would be slightly cautious about is if we just look over on the US dollar. I said that we are likely to bounce here. That's exactly what's happened during today's trading session. We had that beautiful looking hammer candlestick. We are now bouncing as a result of that hammer candlestick that we saw last Friday. So that could potentially act as a minor headwind for stocks. And then if we just quickly go over to the 10-year yield, we're also bouncing ever so slightly up 0.05%. So nothing too serious here, but we were in oversold territory here on the 4-hour chart. So we're seeing some nice bounce, but I still believe that the overall movement is going to be toward the downside, which should continue to benefit US equities. Just quickly looking here on the Nasdaq100. Nasdaq100 currently trading just shy of 18,000. I think that the Nasdaq100 can trade up towards 18,500. Very similar to the S&P 500. There's been no real technical damage done as of recent, despite the decline last Friday of 1.08% and today's decline of 0.35%. RSI, we're still seeing some bearish divergence that will eventually probably take play when we do eventually snap this trend. We can't continue to trade within this uptrend forever. We all know that. Doesn't take a genius to work that out. So one day we will unfortunately break this beautiful, amazing uptrend that we've been trading in since the end of October. And when that does occur, I feel like that will just be when this bearish divergence really takes place, and we do see a slight consolidation or digestion phase of this market, which I think is healthy. It's definitely healthy for the medium and longer term perspective and outlook. And then finally, just moving over to the Dow Jones30, trading pretty much flat on the day. We were down a little bit more heavier, down 0.5% when the US market's opened, but we have pulled back since the US market opened, and we currently find ourselves trading at 38,700. I think this market will aim towards 40,000. It's very similar to the S&P 500 and the Nasdaq100. There's been no real technical damage done here, and I feel like it's still right to buy the dips. But yeah, I think going over the next couple of weeks, the next couple of trading sessions, we need to pay very close attention to the CPI report that we get. That obviously is going to help us understand where inflation is. If that number comes in hotter than expected, then we could potentially see a sell-off in US equities, but vice versa. If that number actually comes in softer than expected, then we could see a very strong rally in equities, because it would mean that last month's slight uptick in inflation is not really much of a trend. It was just a one-off occurrence, which is very common as well. So yeah, I still like the setup here. Technically speaking, we're very, very good. Fundamentally, we're looking strong as well. The consumers holding in, and I still see a catalyst for stronger and higher US equity prices over the next month or so.